There we go. Now, I'm not going to spend too much time on the niceties. I will, however, just share the architectural presentation of the, you should be able to see it now. And I know, is it necessary that I make it full screen? Perhaps I can. Let me change this to full screen. I always battle to get it out again. There we go. Now, very briefly, for those of you who do not know it yet, this is the project in Kempton Park, which we like very much, and you'll see in due course why we like it so much. Now, this particular project, we're particularly proud of for a number of reasons, one of it being that the original consolidation of the land was in fact done by P3 members and clients of the law firm. So we have been involved in this particular project all along, and the background to it is very briefly that we I see Keke and Robert are also. Let me just admit them as well. I apologize if in between I just admit the people as they link up. Then I see they have now joined. Now, what is enjoyable about this is you may or may not realize this, but to actually get to a point where you're in a position to continue. I see there's Terence and Sean and Keke, all of them are also joining. It's good to see so many of our old friends actually participating. And so, okay, let's try again. Now, what happens is, very briefly, the process is, in this particular instance, you had two existing urban, or stands as people very often refer to it. And as you can see, those urban, the buildings on that particular, on those particular properties were demolished. And then what happened is that the four urban or stands were then consolidated into one stand, and it is now known as stand, it's actually IRF 2946. I see the architect actually in error refers to it as stand, but the correct description, as all of you know, of course, is it's supposed to read IRF 2946, but so be it. Now, what's interesting about it is this process of application to the Ekurhuleni Metropolitan Council to consolidate these urban, it can take as much as 6 months just to do that. Then, of course, once you get your approvals, then you have to go through the legal process or the conveyancing process, and that may take you another 2 months or so. And lately, especially during lockdown, is the deeds offices, in this particular instance, Pretoria Deeds Office, are sometimes in lockdown, and they're not, they closed because of COVID and et cetera. So it's been pretty difficult to get it to the point where these four urban had now been consolidated into one. Now, then after that, of course, there is an application to the Ekurhuleni Metropolitan Council. Let's just call it Ekurhuleni from here on in, for the opening of high density housing in this particular instance. You can see it is a total of 60 sectional title units. And that is actually quite an exercise, because involved in this process is the town planners, the architects, the surveyors, then the legal people like ourselves, or the conveyancing people, and then also the engineering side, especially in respect of civil services. Now, those services are, as a rule, relate to access, roads, in other words. You can see here, there's a road. And on that side, if you can see it on your screen, is another road. Now, access means you need to be able to get to your flat over there. So that's one of it. The other one, of course, is electrical supply. The third one is water and the supply of water. Now, with a development like this, you're probably looking at anything between a 50 millimeter water line, and it could go as high as 125 millimeter water line. And I can assure you, if you have 150 millimeter water line, then that's a lot of water. To give you an idea, 125 millimeter is literally 12.5 centimeters in diameter. So I assure you that's a lot of water. I see Keke is actually battling to get online, but okay. I'll keep on trying to see if I can get him. And I see he's joining now. Welcome to all the newcomers. So that's then water, and then the fourth, civil service. And I know Sifiso and Terence and you guys, you engineering types, you know all of this, so bear with me, because not everybody actually understands what happens behind all of this. Your fourth civil service is then sewage, or sometimes we call it sewage, S-E-W-E, S-E-W-A-G-E. There we go. And then sometimes you also have the requirements in respect of stormwater, especially if there's a slope on the land. I see there's Bernardus also, and they're all joining. Great. Now, those services, before you can even do the construction of those services, you actually have to provide site development plans. We refer to it as a SDP, and submitted to Ekurhuleni, all those departments, including parks, safety, traffic, fire, all of them actually have to peruse those, the proposed SDP, and approve it, sign it off. And as you can hear, this is a lengthy process. It can take probably up to, in many instances, up to 2.5 years just to get that done. So this process was actually delayed a little bit because of the pandemic. So we are at this point in time, almost 3 years down the line, and they have now started excavations and construction. We propose to register the sectional title register and do the transfers during the course of November this year, in other words, November 2022. And what you see here is actually the updated SDP as it was updated on the 21st of January, and it's sitting in the Ekurhuleni's offices just to sign off on the updated SDPs. Now, I'm not gonna belabor the point and explain the rest of the process to you, except that this is pretty much on course. All the rights have been approved. It is on its way to the Surveyor General's office, where probably within the next 2 months, we will have final approval of the proposed sectional title plans. And from there on in, we're just going to sit on those plans until we are ready to go to the deeds office. So you can see this is nice and clean. It is a pretty small development. So it is quick and easy, so to speak. Now, for us as developers, it is a predicament in the sense that by now all of you know that our philosophy is we as investors do not wish to take up more than maximum, and I mean that's the outer boundary or marker, than 60% of all units in a development. So the reason for it being the backbone of a successful body corporate, of course, are those owners who live in these units. So if we allow less than 40% of owners who will actually live in these units, then we run the risk that our body corporate becomes ineffective, because I promise you, especially I know some of you guys who are actually attending this, I know most of you and many of you own quite a number of units, and I dare you tell us how many of the AGMs of these body corporates where you own units do you actually attend? We don't, because if you own 10 units, it means you have to attend 10 AGMs every year. If you own 100, you can see it's the scale is just simply too large. And that's why we say we as investors will never ever take up more than 60% in a development, purely to protect the integrity of the management of the sectional title scheme. I hope it made sense to you. So once we've said that, and if we say that we allowed a maximum of 60% of these units for us to buy, then if you do that calculation, it means we as investors cannot buy more than 36 units maximum. And that's unfortunate, and I apologize, Bianca, and I apologize already, because I know we're going to come up short with units. We have a plan B for that. We'll discuss it with you along the line within the next 6 weeks or so, where we are developing Martha's Vineyards, the 2 final phases in Boksburg, but we're not going to deal with that today. We'll deal with that in due course. So can I stop this share? Everybody had a good look. In any event, if you want it, you can, of course, let me know, and we'll send it off to you. Now let's start with the nitty-gritty. What we're doing tonight is we're looking at the actual numbers. Over and above the actual numbers, we also going to take a brief look at the tax implications. And I know tax is a subject that requires not even hours, it requires days and sometimes weeks. So we're briefly going to take a look at two issues surrounding the tax application. So I see Betty is also waiting to join there. I hope that's done. So we're going to start with the top floor units. 3 floors, as you would have seen: top floor, middle floor, and then ground floor. Now the pricing differs. So let's start with the top floor ones, which I'm going to share with you. Is there anybody who cannot see this screen? Okay, just raise your hand if you can't see it properly or if you can't hear me. What I actually would like to do, if you don't mind, is I just want to increase the size of it a little bit, and I actually have no idea how to do that. So I'm just going to let that go. It should be somewhere at view. So if I can make that. Sean, I always ask you because you always know how to do this. So if I say zoom, and I make it, Sean, must I make it 110 or must I make it 90? Let's try the 110 first. Aha, that was slightly too big, isn't it? There's Saul as well. Okay, I'm just going to make it 105. Okay, now we have a full screen. Let me just see. Sean, okay. Sean says, looks good. Thanks, you guys. Peter, you too. Okay. Now, what is interesting about this one, I just want to show you a few interesting things about it, is the top floor is the least expensive, 699,900. Now, my lovely wife did a lot of work on this, and immediately I have to caution you, the numbers that we reflect here are extremely conservative numbers. You know us by now, all of you, most of you, and you know we would rather underscore it, meaning be extremely conservative with the returns that we look at, and then be very liberal with the actual expenditure. Okay, so I'm going to spend more time on the first one of the 3 because I need to establish a few parameters and just basically deal with a few issues and considerations about this. Now, our research, or Bianca's research, actually predicts closer to 7% on the projected income growth. And I want to tell you why I toned it down to 5%. 2 reasons. The first thing is our inherent reluctance to be realistic or optimistic. We would rather be pessimistic. The second thing is we don't know yet what the impact of the Russian invasion of its neighbor, Ukraine, will have on our environment. I can assure you it's easy to say it's far away from us and they're not going to bomb us, etc., etc. That may be so, yes, but I can assure you that the prices of grain and wheat will be impacted quite significantly in the Republic. Why? We are net importers of grain and wheat. And guess what? We import a significant percentage of our wheat from, lo and behold, Russia. Russia, up until a number of weeks ago, was by far one of the largest net exporters of grains and wheat. Now, according to the embargoes and that sort of thing that the United Nations, etc., are now enforcing, making it for us very difficult for us to actually do business with Russia, it means we have to find alternative sources. The same applies to crude oil and petroleum-related products. It's not as bad for us as it is, for example, with Germany, who rely still at this moment for 55% of their natural gas imports on Russia, and it leaves them with a really difficult choice. But a significant percentage of our petroleum imports actually originate from Russia. So it will have a direct or indirect impact on prices. The real problem is this: because of the predicament with the embargoes now playing their part, you would have seen that the prices of crude oil on the international markets shot through the roof. Now, I promise you, I can assure you that shortly we will see a petrol and a diesel price in our country reaching 30 Rand per litre. And we're not far away, if things carry on as they did over the past 4 weeks, that we will actually see 40 Rand per litre for petrol and diesel. Now, the important thing that we have to remember is the very moment that diesel prices especially are increased, it immediately impacts the rest of the economy. And combine that with the fact that basic foodstuffs that we consume on a large scale will also be impacted, and prices will increase because we have to find alternative markets to import those. So what am I saying? We have not been able to discount exactly what the impact eventually will be. I can assure you that we're going to see movement in the interest rates, because that's the next thing that happens when inflation is on the rise. The Reserve Bank is going to increase the rate, and that'll have an impact on us. Now, what I want to demonstrate is this: I chose not to predict the 7 to 8% that under normal circumstances we would have predicted for capital growth, income growth and capital growth. There's that. That we would easily have predicted to 8% and this close to 7%. And for reasons I have now disclosed, we chose to be really conservative. Now, what is also important, I see Gaza is battling to get online, but okay. Now what happens is the following. If we take our bond over 20 years, 240, and we do not pay, let's change that, if you don't mind, to 0%. If we do not pay a deposit at all, The impact would be the following. If the rate is 7.5, where it's sitting at the moment, it means we're going to borrow 699,900, just about 700,000 from the bank. Now what happens is you will see that we will register during November this year, but it is the financial year 2023, as you of course understand. Now, so it doesn't mean in the year 2023, it means financial year 2023, which means this year running into and including January and February of 2023. So we talk about the financial year, and the month, of course, is November. Now, what happens is the following. If we use the 7.5% and we don't pay a deposit, our expenditure will be the following. Conservatively, we know we will get 6,000, and again, we toned this down and we reduced our normal expectation because of the economic environment, and we toned it down to 6,350. There's my installment. And now what happens is my levy is 640. That's pretty much spot on. And we as investors will be excused, or the first 6 months of that will be free. So what we show here during financial year 1 is, in other words, 640 multiplied by 6 months, that'll give us 3840. But for the first 6 months, we don't pay that levy. The municipal charges, we actually calculated with the help of the officials of Ekurhuleni, and the reality is between levy and municipal charges, we will pay 888 Rand per month. We kept the agent's commission at 8%. Now, if we don't pay a deposit, then it means during the first 6 months, I will have a shortfall of 44 Rand and 35 cents. Now you're beginning to understand, hopefully, why we're really excited about this, except for the fact that this is within our circle that this whole project happens. And you will see the reason why I have almost 4,000 Rand shortfall during year 1 is because you have to add. You cannot be blind and say, okay, 44 times 12, and it cannot be 4,000. Don't forget, the second 6 months, we're going to pay the levy. So I will have an annual shortfall during year 1 of 3,973. It'll come down during year 2 because my income is going to increase, but my expenses will accordingly increase, which means I will still have a shortfall during year 2, and then, of course, I will have a shortfall during year 3. Now what happens is, if you look at it from that perspective, I will start making actual money and have to start paying tax during year 4. And this, of course, is on the presumption that I'm not paying a deposit. What I would like to demonstrate is the following, is if I change that and I say I'm going to pay a 10% deposit. Now, I know many of us actually dislike paying that deposit simply because we say, okay, we want the tenant and other people to pay our bonds, so it's other people's money. The truth is, and I want to show you this, if I pay a 10% deposit, my return on investment in year one is 58%, and there you can see the return on investment. And my total capital investment in respect of this property will then be 72,272 Rand. Now, if I then choose not to pay deposit, have a look at how the numbers change. Oh, it's nice, Unati, to see you as well. Now, all of a sudden, have a look at my return on investment. Why is this? Because I will only pay shortfall of year one towards capital investment because I'm not paying a deposit. I will pay a shortfall during year two and a small shortfall during year three. So my total capital investment, my investment out of my pocket, will reach a maximum of 7,000 in total. And this is why you get these ridiculous numbers, rate of return. Why? I calculate my capital growth year. I buy for 700, 12 months later it is worth 741, the year after that 786, and the same thing, I start off with rent 6350, and you can see how it increases, which means I calculate my return based on the capital that I invest with reference to my capital growth and my income growth. I hope it made sense, but most of you understand this concept. So what we do is we go back to the 10%. And I want to show you this. If I do the 10%, then this is a pretty handy return on investment. Plus, what now happens is right from the word go, I have at the end of year one, I reach the pinnacle of my investment, which is 72. And then once we have that, even though for the 6 months, the first 6 months after registration, I will have a surplus, what will happen during year one, I will still have that small shortfall, because remember, the second part of the year, I will actually pay the levy. Now, the first thing that I would like to show you is, if I take during this first 6 months, my surplus, and I put it back into my Access or FlexiBond, have a look at those numbers, what happened with them, and have a look here. I want you to have a look at that. If I change that to yes, I'm going to take my $500 per month and pay it into my bond. Look at what happens. I will now all of a sudden have an actual shortfall. And the reason for it being, if you look at that number and look at that number. Because what I've done, you'll see there, I take every single month the so-called surplus in cash flow, and I invest it on my Access bond. Let me do the following. Remember that 623 there and the 15 in interest paid. 623, let me do this and go back. There we go. My 623, in other words, my capital at the end of that year has now gone up to 694, and my 15 has gone up to 17. Let me do that again. If I do not, I see I've actually done it double. Sorry about that. There we go. So if I say yes, have a look at these numbers, 625 and 15. So if I say yes, see the difference. Just by paying that $500 per month for 6 months in, I reduce my bond balance at the end of that year with over 2,000, almost 2.5, almost 3,000 Rand. Now, if I then go ahead and I add to that another 500 per month that I continue paying excess, have a look at what happens. Look at these numbers again. I should actually just make that no, sorry. There we go. So if that's 0, have a look at those. You see that? And if I make it continuously 500 per month, small amount, have a look at those. It changes it continuously. Now, if I do that and I add 1,000 Rand, have a look at these numbers again. See how it changes. There's Limco. I hope let me just see. For interest sake, could we bump up the interest rate by 2% over the next 2 years? Warren, yeah, we're going to get to that. It's highly unlikely that we're going to see an increase of 2%, but it might be interesting to see that. We'll bump it up, Warren, in quarters. In other words, 25 points per shot. Happy with that? Great. So now, just for interest sake, I want you to have a look at this. There's another. Okay, my pleasure, Warren. We'll do that. Just make a note. After 10 years, if I pay 1,000 Rand per month extra in year, then my balance will be 249,571. I'm just going to make a note. 249,571. Now, if I change that to 2 grand, have a look at what happens here. See the difference? Then after 10 years, I have 71,000 left. If I bump that up to 2,500 per month, I'll have it paid during year 9. There we go. Many of you have seen this before, but it always amazes the living daylights out of me when I see this. But okay. Now, what is interesting about it is if you do that, you will actually have an annual shortfall. In other words, an actual cash flow shortfall all the way into year 9. And then, of course, you'll start having a real important and serious tax predicament here from year 10 onwards. Okay, with your leave, I'm going to make that 0 again. And as Warren requested, let's bump that up to 7.75. Now, Warren, just for interest's sake, you picked up on something that I wanted, the point that I wanted to make with a 10% deposit. If we increase that to, I see Gaza is battling to come online, but okay. If I make that 7.75, have a look at how it changes my numbers. Now, we're going to see 7.75 still this year. I promise you that. But then I still have a cash flow positive during the first 6 months. And I will still, of course, have that tiny shortfall during year 1. Now, you can see my return on investment is now slightly different. Now, if my interest rate goes up to 8%, shall we make it 8%? Because that's the next one. And I have a suspicion towards the end of the year, we're actually going to see that 8%. Look at what it does. Now it reduces my first 6 months positive cash flow, yet a little bit more. And I have accordingly a slightly higher shortfall during year 1. Now, let's, Warren, be adventurous and let's move that one up to 8.5 because it is not all that far-fetched. Have a look at what the numbers do over here. So then I will have still have during year 2 a positive cash flow, slight negative cash flow because of that guy. I see, let me just admit the people as they come online. And I will still during first 6 months have that tiny little. Now let's be, okay, there's somebody who wanted to ask something. Let me just admit those who battle to get access, and let's see what Augustine, I had, sorry, just before 7, okay. That's fine, Augustine, don't worry about that. I'll send you the link once we've uploaded that onto the YouTube. As a matter of fact, I'm going to ask all of you a big favor. I'm going to type here my email address at GCS. Please jot it down. I'm going to ask each and every one of you just to send me just an empty or mail, and Bianca and I will forward the link to each and every one of you. But thanks, Augustine. It will be up there within the next, by tomorrow morning. It should be on there. And okay, so what I would like to do, I would actually if it's 8.5%, let's take a leap of pessimism, and we make that 9%. Then for the very first time during the first 6 months, I will have that tiny shortfall, and then I will have smallish. I must actually just have a look at that. That number is too small, but okay. Terence, may also run the numbers at 20% deposit. Sure, in case the banks are too strict with the lending criteria for investors, but the current interest, yeah, I'd gladly do that, Terence. We're going to do that now. What Terence is asking, he says, if I increase my deposit to 20%, because the banks are actually sort of slightly tightening the noose at the moment, but he wants us to have a look at our current interest rate. Okay, so you've seen, that's, as far as I'm concerned, way over the top, absolute worst case scenario. But you can see the difference. So if I change it back to what we have at the moment, 7.5, Terence, and if I bump that up to 20%, then it means I have to pay 139, let's call it 140,000 in deposit. Now, all of a sudden, Terence, you have a bloody tax problem. Now, you wouldn't, Terence, because you qualify for 13 SECs. I'm going to show you that. We'll get to that in due course. But you can see what is interesting. Now, your return on investment in year 1 is now down from 58% to more or less 30% in year 1. Why is that? Because you're investing, instead of 70-odd thousand, you're investing 140,000 of your own money. Okay. Now, most of you understand that concept pretty well by now. Now, just for interest sake, Terence, let's play devil's advocate, and we change that to 8.5, just to show you the impact of it. Immediately, I will have a tiny shortfall during year 1, but nowhere from there on in. And so I get your argument, is it may be that the banks can ask me for 20%. I think you can still get away if your credit record is nice and clean, and if your financial affairs have been dealt with properly. But the reality is, it does detract to a large extent from our return on investment during year 1. Down the line here, when we get to year 10, it sort of doesn't matter anymore. But okay, what I want to do, Terence, are you happy with that? Do you need me to tinker with it a little bit more? Okay, great. Now, I'm just going to change that back to 10% because as far as I'm concerned, that's sort of what we're getting at the moment. I joined late. Let me just see. Lumco, hi, Lumco. Just for clarity, when you run your numbers, are you using your surplus contributions to somehow subsidize the property? Not in this model, no. I'm going to show you now, Lumco, where we actually do that. So if my surplus is 10K and the shortfall is 2K, I should contribute my entire 10K into the bond. Yes, you can. And I'll show you again now. And then Saul says, Gert, it seems as if when interest increase, the surplus shortfall alternate per year on high, low, high, low. Yeah, to a certain extent, Saul, it is in fact correct. And just look at that there. Okay, great. Now, just to demonstrate to Lumco, I know we're not going to spend too much time on it. If we can go back to 7.5, and we have 10%, and to answer your question, Lumco, if I change that and I tell it to take everywhere my surplus away and put it back into my Access or FlexiBond, have a look at that number and have a look at that number, 427,501, 427,501, which means that the balance of my bond after 10 years. So if I change that and I say, yes, please reroute all my surpluses into my bond, the following happens. You can see it has a mammoth impact, more than 100,000 that it reduces my bond by the end of 10 years. So Lumco, you're correct. If I do that, then of course I'm going to have a tiny cash flow shortfall, and that's a cash flow shortfall. But you can see there's a really significant difference that it makes if I plow it back into my bond, my surpluses. Okay, I hope it answered your question. Now, the important issue is the following. I want to show you briefly on the taxation the following. When we look at tax, then at the end of February, this property is going to do the following for me if I buy it in a company. And this is important that you understand this. I see for some reason my system resources are low, but okay. Now, there's my gross income for the first year. My interest I can deduct for tax, not my installment. Have a look. My interest, the system calculates at 15,000. But the reality is that most of the money that I pay towards my installment during year one is in fact interest. You can see it changes significantly in 2024 financial year. My gross income is 80,000. My installments are 80,000, but my interest that I can deduct is only 45. So that's what I can deduct for tax. Now have a look at again. This is my cash flow, my actual cash flow year. This line. There's my cash flow. But this is tax. So I can deduct from my income, my interest, my levy, my municipal charges, my agent's commission, and then during year one, I actually don't have to pay tax. But during year two, I make a net profit of 20,000, which means in respect of this property, I'm going to pay tax during 2024. In other words, after end February 2024. I will pay the receiver 5,629. If this is in my portfolio, property number 5 or 6 or higher, then I can use section 13.6. And I know, Terence, you love this one. So let me make your day and demonstrate that. So if I say it is property number 5 and more, I can now use it for 13.6. My tax allowance Have a look at what happens here and what happens here. It changes dramatically. Look at that. So I would have paid over 5 grand during year 2. Now it's down to 1.6, etc., etc. Because for the next 20 years, I have a tax allowance every single year in terms of section 13.6 to the tune of 19,247.25. You can see it carries on. Now, let me change it. Please have a look at this again. Remember that 11,034 is the tax I would pay during year 10 if I have a 13.6 allowance. Let me just see what the question is. My screen has gone dark. Am I the only one with this my screen has gone dark. Problem. Anybody else who has that problem? Am I still online, everybody? It looks as if it's Gabo, are you still stuck? Anybody else who has the same problem? Lumko says all good on his side. Warren says all good. Terence, all good. Peter, okay. So it looks, Gabo, it's on your side. Is what I suggest is if you go to the left bottom of your screen and you just disable your video feed, that'll free up some bandwidth. So just kill your video feed and see if that helps. Let me know if that does it for you. Okay, go. It seems you've now sorted out Augustine, all. Robert, good. Sean, good. Okay. Thanks, you guys. Please tell me if the resources is low on my side. Okay. I know you guys, you hear me go off on a tangent every single time about this, but just look at the numbers. There it is. So I will have, during year 10, a cash flow of 40 grand, but I will only pay 11 grand in tax. Now, you can see this is nowhere near 27%. Why? Because I have my 13.6 allowance. So if I change that back, please have a look at that tax liability there. 11. Now, if I change it back and I don't have a 13.6 claim, it shoots up with a good 5 grand in tax that I have to pay. Now, guys, multiply this by 5 or by 10, for goodness sake. This thing is actually bloody incredible. I'm just trying to see. Oh, Gawa is sorted out. Great. I'm glad. Now, so what I'm going to do is I'm just going to keep that on 13.6. I know some of you do not have 5 properties yet, and this property will not make it 5, but now you understand the concept why we always working very hard towards that. Now, what I've also done here is if you pay that 10%, and Terence, I want you to have a look at this. If you pay a deposit of 69, you're going to lend it to the company because that's where the money is going to come from. Against your shareholder's loan account, you will pay that 69,900. And if I charge the company, if I'm Terence and I charge the company 7.5% interest on that, it means during 2023, the company is going to owe me in interest 5,249, etc., etc. And what I'm doing is, you can see what happens here. I'm capitalizing it. In other words, I'm not drawing the interest against my shareholder's loan account. I'm allowing it to accumulate on my shareholder's loan account. Now, why do I want to do this? Because at some point in time, I want to start taking money out of this company and I want to draw against my shareholder's loan account. So I want this to keep on increasing. so that I can draw against my shareholders loan account, and it comes out as capital, which means no income tax. Did everybody understand this? Do you understand why this is so important to me? So if at all possible, if it's not going to bedevil my income tax in my personal hands, because remember, if you're under 65 years old, you have an annual interest income rebate up to and including 23,800 Rand per year in interest that you can receive in your personal hands and not pay tax on it. Now you can see we're under that threshold. So the company has the tax deduction for that interest. I accumulate this interest every year on my loan account, and I'm not paying income tax on it because it's under the threshold. Now, none of you present here this evening are actually older than 65. I think I had a look at most of you, and you're all still youngsters. Some of us, Peter, you and I are probably some of the older ones here, which means you and I are the wisest of them all tonight. But okay. Now, what happens is you can see how my shareholders loan account increases every single year. Now, that is actually what I want. If I can afford the tax here, and I can, you clearly see I can, then I want this effect. I'm going to charge the company 7.5% on the deposit that I lend it. Now, just for interest sake, let's go overboard. And I change that to 10%. Have a look at my numbers here. Hell, why not? I'm still under the threshold. But now all of a sudden, after 10 years, the company owes me 181 instead of 140. You guys see what I'm doing with this? Is it's all in the numbers. Now, I choose not to replay this shareholders loan account here. You can see that. This just tells me during November, I'm going to register in the financial year 2023. Okay. Anybody who did not follow this, do I need to make something a little bit clearer here? Depending on how much I lend, actually, Terence, I'm going to play your game and increase that to 20%. Hell, why not? You still online, Terence? Have a look at what happened. Okay, Terence, I now increase it to what your heart desires. Now what happens is now I lend 139,980 to the company. And I'm charging it 10% interest. Now you can see here, I'm still well below the threshold. So the company will have for this financial year, 13,000 tax deduction. But you will not pay tax on the 13,000, almost 14,000 that you're receiving because you're earning that. And you will see only during 2029 will you actually start paying a little bit, a tiny bit of income tax because you've now exceeded the threshold of interest income of 23,800. So from here on in, it will have a slight impact on your personal income tax. But for 1, 2, 3, 4, 5, 6 years, you're going to have a really nice, and let me show you what I mean. I'm just going to overwrite some of my codes just to demonstrate something to you. If I do this, I can deduct this interest that I'm paying here in the company. So let's do that from my tax perspective. Have a look at what I'm doing. Okay, what I should do, sorry you guys, I should have done that. Okay, now have a look at this. I have a disastrous tax loss and I can carry it over to the next tax year. So if I take that principle and I carry it through for the next 9 years. Have a look at what happens. Look at my tax scenario here. I have an immense tax break here. Now, okay, remember year after year, 5 or 6, because that is ring fenced, the receiver is going to tell me, you better start making money or else I'm not going to recognize your tax loss. So what now happens is you can see if I charge my company interest on my deposit, as Terence loves to do, then it means there's my tax regime in that company. Ladies and gentlemen, how's that for a tax holiday? Okay, now I'm just going to undo that.
Yeah, sorry, this is Peter here.
Yes, Peter.
I just wanted to ask a quick question. This, the actual mechanics of the shareholder, lending to the shareholder's account.
Yeah.
Is there a particular way or process that needs to be followed? Because I typically just transfer money into my company's account and then pay things, from there, like the deposit or whatever.
Yeah.
Is that okay, or is there a particular process that needs to be followed?
Peter, yeah, I'll save your backside normally from your own doings. As a rule, the first thing is we need a paper trail. You know the receiver and how they work. I see Godswill is. I didn't see Godswill attending. He's a senior guy at SARS, and he'll tell you the following. I need, number one, a paper trail. So what Peter does, and I know this is how he's doing it, he goes online and from his personal bank account or his savings account or his investment account, he does a transfer of 139,000 into the current account of the company. That's how he does it. So there's step one of the paper trail. But guys, be careful, because the receiver is breathing down everybody's neck. In the sense that, please, if you don't now, just give us a shout, send us a mail. We'll circulate the actual resolution that you need to take. And Peter, this is important because this is what everybody forgets to do. So you do a resolution that says at the meeting of the board of directors of Peter's company, registration number so-and-so, on such and such a date, on the 15th of March 2021, held at Kempton Park, it was resolved that Peter will lend against to be credited against his shareholders' loan account in the company in his capacity as so much 1% shareholder, the amount of 139,980 rand, towards payment of the deposit payable by Peter Company in respect of the purchase of number 1 Peace Haven. Signed by all the directors, boom, end of story. Peter, it's as simple as that. But you know what happens to us all? We're busy people. So we forget to do this. For Bianca and I, it's easy because we have fancy computer systems. We push a button and the system actually spits it out. It does it for us. But for those of you who obviously do not have these systems, just give me a shout. We'll send you a template of these resolutions. All that you do, you can fill it in by hand for all that I care. And then you file it in your LeverArch file. So 2 things, you do that transfer, you have your paper trail, you save your transfer slip in that folder on your computer. The second thing is you complete that company resolution that says this is what we're doing and why we're doing it. And it's as simple as that. And when you do your books towards the end of your financial year, then you have that handy. Alternatively, you send copies of that per email to your accountant because they're going to need that. Peter, did this make sense?
Fantastic, Gert. Thank you very much. That is exactly what I was wanting to hear.
Okay, Peter, just give me a shout tomorrow, a short, brief mail, and either myself or somebody from the Kempton office will just forward a template for those resolutions in Word format. Look, I know you've done this in the past, so I know you actually know how it's done. But if you need some help with that, just give us a shout. We'll send it off to you.
Thanks very much. All help gratefully accepted.
Right. Let me just see. Saul, Gert, after the initial, let me just see, Lumko. Saul said, Gert, after the initial shareholders loan deposit payment, can you still continue advancing shareholders loan on the same property? Absolutely, Saul. Now, let me just remind you again of this. If you remember this field here, if I want to pay extra into my bond, and I know, Saul, you particularly like doing this, then what happens is the company does not necessarily have that extra $2,000 per month. So every month you will increase your shareholders loan with 2,000 because you're going to transfer it into the company. And then you're going to do a once-off resolution that says the company will borrow from here on in until mutually agreed by the parties, 2,000 Rand per month from the shareholder, Saul, etc., towards additional payment into the flexi or access bond held at such and such a bank in respect of Unit 1 Peacehaven. Saul, I hope that helps you. So in that instance, if you're going to do it every month, you take one resolution for each and every month after that. And if you then want to quit doing it after 2 years, then you do another resolution that says it's resolved that the parties have agreed that Saul will not advance any further funds towards additional payments, blah, blah, blah. So it's pretty straightforward. Let me just see then, Lumko, if the trust is a shareholder, does this mean I, as the trustee, should contribute 100K tax-free to the trust and the trust loans the money to the company? Bear in mind that I'm the director of the same company. No, Lumko, what you're going to do, you're not going to lend the money from the trust to the company because the trust probably doesn't have the money. And quite frankly, you don't want to lend it to the trust and the trust then lends it to the company. Take the shortest route. The money originates from your pocket. So you take it from your account and you own one share in that company, and it's in respect of that share that you pay that 100K, you lend it to the company. So don't take the long route because probably in about 6 weeks or so, we will have a brief look at the impact of Section 7, capital C. So if you start lending money to the trust and the trust lends it to the company, you start, you actually start moving towards the dire implications of 7C tax. Now, I know it doesn't necessarily make sense to you now, but no, please don't do that. You as the shareholder, you own one share. You lend the money to the company in which you own one share. I hope it made sense, Lumko. Okay, Saul, happy with that? Great. So what happens is the following. And now I'll have to remember to undo all these codes afterwards. But the bottom line is the following. This is tax holiday. Let me just see. There's another note. Okay. Thanks, Lumko. I'm happy it worked for you. So this ladies and gentlemen, is the top floor one. Now, I'm just going to stop this share, and we've now had a look at all a basic taxation, and the numbers, as you can see, they're actually pretty nice. So everybody happy if I stop this share and then have a look at the middle floor? Can we carry on with that? Great. So now I need to share screen, and I need middle floor, which is going to be this one. Everybody can see that. Okay, now have a look at this. Let's do the very same thing. Let's make that deposit 10%. My price is $729,900. Now, as you can see, I have that surplus, but I will have during year one my slight shortfall. The reason is I have a 200 Rand per month higher rental income on it. Now, of course, my levy and my municipal charges remain exactly the same because it is exactly the same size unit, but I have a slightly higher rental income. So it distorts to a very slight degree the picture, but okay. Now, the important thing is, if you don't mind, these numbers speak for themselves. What I would like to do is tinker with the tax. If I say this is a property that qualifies for 13.6, have a look again here. Look at that. Every time I do this, I enjoy it so much. And same thing here. I want to increase the money that the company owes me. And with all due respect, this is why I like what Saul and what Terence do, is try and pay either continuously extra into the bond, alternatively, if you can afford it, change that to that 20%, because it just makes a massive difference. Now, keep in mind, I want to show you this again. If I do that there during that year, and I take my interest that I pay myself from the company during year 10 on my shareholders loan account, then the following will happen. Have a look. 12 grand tax. There's my interest. Of course, I should have made that a minus. You guys don't even tell me about it. How's that for good business? Okay. It shaves off 50, literally 50% of my tax during year 10. Simply because I've been doing this. And as you can all see, it's small little things that we do. I just want to undo that. Otherwise, for some reason it didn't. Oh, I see. Sorry, I should have given it one more. Okay, there we go. So now what happens is, I think, do I need to dwell on the middle floor? It's just the numbers that change, but I think we've dealt. Now, what is interesting on the middle floor, have a look. If I have my 20% deposit, my rate of return is down to 29%. Okay, as I said, gradually it sorts itself out. But if I do the 10%, it's 6 of the one and a half a dozen of the other. You can see the difference that it does make. Okay, everybody, can I stop the share that we can have a look at the expensive one, the ground floor? Happy, everybody? Great. And there is my ground floor.
Schat, it's Peter again. Thanks for everything. I'm going to have to bow out at the moment.
Okay.
But yeah, it's looking good. Thank you.
Okay, Peter, not to worry. I'll send you the link by tomorrow morning. The MP4 recording will be up.
Thank you. I will send you an email for a reminder as well as for the resolution templates. Thanks once again.
Okay,
Good
great.
night, everybody. Cheers.
Okay, bye-bye, Peter. Okay, so everybody, now this is the ground floor one. Now, that's 749,900. Let's just call it 750. Now, again, Terence, if we start with the 10%, you can see the numbers, what it's like. So the ground floor, the expensive one, you can see is a slightly bigger shortfall. Not dramatic, because my income is only $200 more than middle floor. But you can see my installment is now over $6,000. Okay. So if I change that to 10% on the ground floors, now I know all of you actually want the ground floor ones. I get it, because it seems as if your market segment for tenants is just slightly bigger, because older people tend to want the ground floor units, and people with disabilities, et cetera, et cetera. And then, of course, you have those people who insist they want a Chihuahua, and they need some grass for the Chihuahua's ablutions. So, yeah, you're right. From that perspective, you have a slightly bigger market segment than the first floor and the top floor. But okay. What is interesting, if I pay the 10%, it actually compares pretty well with the top floor one. Now, if I go and do this again, and I say, okay, I want my 13.6 allowance, and I have it, then you can see, have a look at and how it changes my number. Let's just do the same exercise. I've lent this money to my company on my shareholders loan account. Now, there's my interest, and this should, of course, be 10%, because it does make a difference, doesn't it? So I'm going to charge my company 10%. So what happens now is, there's my tax, 11 grand. So if I do that and I say, okay, I have another, then have a look at how it reduces my tax during year 10. So you can see we can play with this on and on till kingdom comes. But the reality, it's these small things which make a difference. Now, so I like this from a tax perspective. I like it from a capital growth, income growth perspective, and of course, affordability. These prices are slap bam in the sweet spot. Okay, so these numbers, by now you understand them, and I'm just going to keep this up. We more or less done with this. I hope the numbers make sense. As I said, please, everyone, just send me a blank mail. Then we'll forward you the link. It'll be up by tomorrow, and at your leisure, you can revisit this. Any questions from any one of you? It seems that your questions have been answered. I'm really glad.
It's Bongani.
Hi, Bongani.
Yes, just a quick one, man. I think I'm confused a little bit in terms of using your trust, to buy property or to lend money, I think, or the company. If you can just give, a clarity between the two. Which one is the best to use a company or the trust to buy or even lend and borrow money?
Okay, Bongani, the first thing is I'm going to ask you to phone the office tomorrow morning and immediately ask them for just a half an hour or an hour consultation that we can have a look at your structure. But I'm also going to answer that now. You certainly don't want to buy your properties in the trust, because there you will pay 45% income tax. And then these numbers will look significantly different, and I'm going to show you that. If it's in a trust where you have all of this taking place, you're actually going to pay 45% income tax, and look at the dramatic difference that it makes. Did you see that?
Yes, it looks very scary.
Yeah, it is. It's downright bloody. So if I change it back to 27%, you all know that the company rate has gone down 1%. Eh? So have a look at that. You can see it's a really significant difference. So just from that perspective, Bongani, you want to buy the property in the company, not in the trust, but you want the vast majority of the shares in the company issued to the trust because of protection of assets and continuity, etc. So Bongani, do me a favor, just phone Kempton office tomorrow morning and just get them to reserve a date and a time that we can just quickly run through that structure. But for time being, I can tell you right now, we're going to buy this property in your company, not in your trust. I hope I answered your question.
Thank you very much, Gert. It's very clear. Thank you.
Okay. Let me just see Bernardus. Hi, Bernardus. Can we please make deposit 20% and monthly repayment 12.5? See what happens? Sure. It's actually going to be really interesting. 20% deposit and in total 12.5 per month. Yeah, okay. I'm sure I can do that. So Bernardus, 20%, there's that. Were you asking for an additional of 25 or a total payment of 25? Can you just let me know?
So that would be monthly 12.5.
An additional of, or total payment of 12.5.
No, yes, monthly extra payments to repay the bond.
Okay, you're actually not going to believe this when you see this. You ready? Have a look at this. You pay the damn thing off during the course of year 3. How's that? But the bad news, Bernardus, is your rate of return is down to 23%. Yeah, and it of course from here on it increases quite dramatically. Let me just see. Augustine, thanks. Okay, Bernardus, I hope that answered your question. When you watch the video, then you'll actually see these numbers. Look at that. You'll pay off the bond. Now that should actually stop. There's a problem in the coding here. Why doesn't it stop there? Because it stops here. So I have a, oh, sorry, I'm stupid. They're my installments. Sorry, you guys. I was a little bit misguided there. So my installments actually do stop here.
Can we also look at the tax at the bottom, please?
The tax on this scenario.
Yes.
Okay, you're going to hop and pay because all of a sudden during year 10, you, in respect of this one property, you're going to pay 21 grand in tax, except if you lend all that money. If you do the following, you're going to charge yourself 10%. Shall I do that, Bernardus?
Yes, let's see what happens.
Keep in mind that so I think your microphone is on.
I was comforting you were walking. Because I was walking. Now I can't walk.
Let me just quickly send a chat to everybody. Everyone, please.
What? What did you just say?
I think it's Bongani. Can you mute Bongani's mic?
Is it Bongani?
Bongani Ngosi.
Okay.
Sorry.
Yes, sorry. Let me just, it seems that we have success. Okay, there's Bernardus, you can see there's my interest that I'm now charging the company during year 10. Now, there's my tax 21. I have my 13.6, for example. I'll do both permutations, equals, there's my interest. There we go. So you can see it actually does make a really significant difference. I hope that that explained it to you, Bernardus, because you can see it makes a dramatic difference. We have to do this because what now happens is you literally every month. Now what happens, what we don't reflect here is the 12.5 that we don't add here. It's actually something that I should have to include in the calculation, that 12.5. It's supposed to actually do it, quite frankly. 207, it actually, let me just see if it does it. No, it doesn't add it here. It doesn't add it here. But okay, just for interest's sake, if I keep on adding, what I can do is the following. Let me show you. That's fine. So if I add, let's just play around with it, Bernardus, and just do that. That's an interesting proposition. I just want to, what is it, F4? Okay. Now what I'm going to do, I'm just going to carry it through because this will make a really interesting difference because every month I lend this to the company. Keep in mind that. Have a look at that. How's that for a very nice? Look at that. It reduces my tax to almost nothing at that point. Okay, I find that really interesting. I'm going to change these underlying algorithms just to reflect that. But Bernardus, thank you. That's a really interesting scenario. Let me just see. Bongani, don't worry about it. Okay. Sorry, Sol. I think for a moment there, I accused you. I do apologize. Forgive me. No, I'm done in any event. So, okay, guys, this is really interesting. I'm going to change the algorithms in this to reflect what we pay extra. There. Thanks, Bernardus. Any other questions on this? Yes, somebody else. Calculations where the annual rate of return is 54% for 5 years. Possible to show me calculations whereby the annual rate of return is 54%. Yeah, you see, that's difficult, Lumko, because the rate of return is actually determined by what we do with the numbers here. So what happens is I can search for it to give it to me by changing this 10%, then it's 39%. So we're not there yet. And what I do is I delete that. There be 58%. Bongani, do you see that? So this is determined by what I do here and here, because this determines how much deposit I pay and how much my bond will be. And of course, if I pay anything in addition. Now, if I just pay a straightforward 10% and I don't pay anything in addition every month, I will start on a 58% rate of return. But keep in mind, because my capital invested will remain static, it's not going to increase. And the value of my property is going to increase, and my income is going to increase. You see that? It means that my rate of return is also going to increase. Obviously, because my capital invested remains the same, but my capital growth keeps on going up and my income keeps on going up. Bongani, I hope that made sense.
Yes, it does. Thank you.
Great. Okay, any other questions, you guys? I actually just want to undo that quickly, if you don't mind. Otherwise, I forget about it and then I save it. Did it change it? It actually didn't, did it? Oh, I see what I did. And once more. It keeps doing that. Some reason. Okay, well, I'll sort that out afterwards. There's Lumco. Yeah, guys, Lumco says the following. Thanks, Gert. It's clear now that no asset class beats property returns. Absolutely spot on. And I always say, you know what, those of you who've known me for many years, I always say, don't listen to my words. Watch the facts and the numbers. It's as simple as that. The numbers don't lie. I must just figure out a way how to undo that. Let me see if I can. I'm supposed to be able to undo it, or I just want to say, there we go. Okay, done. Okay. Any other questions?
No, I just want to say, Gert, numbers don't lie, and politicians too don't lie. They just postpone telling the truth.
Yes, they've lost the ability to distinguish. You guys, we in for an interesting ride. I promise you. I know we all pessimistic about it, but don't be. Remember, I always say, when the proverbial blood runs down the proverbial streets, that's when we invest. Because those who do not look at the facts, they shy away, which means it leaves it wide open for us. But okay, as long as we know what we're in for, and we've now gone up with this, I think, how much did we go up to? 9%? I think we did, yeah. And you can see the impact is we need to be able to manage the risk. And there's the answer. So yeah, you're absolutely right. Is there a politician with us this evening? I had a look at the list. I didn't see. Bongani, of course, yes. Were you saying this about yourself?
Yes, Gert.
I love it. Great. Well done. Bongani, I wanted to tell you, yeah, thanks. I discussed Peace Haven with you, and we were fortunate enough to end up with exactly the right person for those calculations on the municipal taxes, and they gave us the exact amount.
Okay, I'm glad you went well with that.
Great. Thanks, man.
Okay, thanks.
Okay, anybody else? Any other questions, remarks? Can I stop the share?